Welcome to another weekly S&P 500 analysis. Now, before I begin, I just want to remind you that there is a text version of this video in my newsletter on substack.com. And I have put the link in the description below. So if you are interested in referring back to this video, go and read the text version. There's a link in the description below. And here we are looking at the S&P 500. And as you can see, after 3 consecutive up weeks, 2 consecutive weeks of making new all-time high, we finally got a little bit of a pullback from the S&P 500, and it finished the week with a small loss of 0.64% or 39.18 loss for the week. And for the NASDAQ 100, we see the NASDAQ 100 push through into a new all-time high once again. And that is primarily due to the regained strength from Tesla, Google, and Apple. And looking at Tesla here, you can see that it made a new all-time high, and it gained 12.08% for the week, or $47.01. And for Google, remember Google was sort of lagging from making a new all-time high as the other FANG stock were making a new all-time high. Well, finally caught up, and it made a new all-time high last week, and it finished the week with a gain of 8.65% or $15.11. And Apple relentlessly, continue to push higher, and it's getting close to $4 trillion market cap. It is unbelievable for this stock here. It is currently sitting somewhere around $3.75 trillion market cap. But for the week, Apple gained 2.18%. Another $5.29. Looking at these stocks, it seems like the market is doing great, but it isn't. If we take a look at what is moving this market and what is not moving this market, and it review the true state of the market. So let's go and take a look at some of those internals. And here first, we're looking at the sentiment. And as we can see that the market participant or complacent is sitting at 13.81 on the VIX, and they are definitely bullish with a put-call ratio at 0.65. Now, when we start looking at the internals, that's going to paint a different picture here. We see the advanced decline been negative throughout the the last 10 sessions or so, where only a single session actually had more advancing stock than declining stock. And also looking at the up-down volume ratio, most of the time it's been more selling than actually buying. As a matter of fact, we only saw one trading session out of the last 10. It has more up volume than down volume. The remaining 9 trading sessions had more down volume than up volume. So that can tell you, the amount of weakness internally in the market, while the S&P 500 is being pushed up by a few mega cap stock. And here looking at the new high, new low, and this is revealing, you see that the number of stock make new 52-week low last Friday in the New York Stock Exchange is 113, while there were only 38 stock make new 52-week high. And look at the contrast. A couple of weeks ago, we're seeing acceleration of the stock making new 52-week high versus the number of stock making new 52-week low. Right now is pretty much the opposite. We see an acceleration in the number of stock making new 52-week low versus the decrease in the number of stock making new 52-week high. And here's the tail of the market here. This cumulative AD line in the New York Stock Exchange continue to make lower low, while the S&P 500 making a higher low. And in addition to that, we are seeing the gap between this negative divergence is getting wider. So this is quite concerning in terms of a possible sudden liquidation will pop up in the market unannounced. And here looking at the NASDAQ, the internal for the NASDAQ is negative as well. We see the up-down volume ratio being mostly negative, and also the advanced decline mostly. A lot of time we're seeing more declining stock than advancing stock, and you can see that the NASDAQ 100 been hitting new all-time high. And again, similarly to the New York Stock Exchange, we see more stock making new 52-week low, then the number of stock making new 52-week high, and that is accelerating in terms of the number of stock making new 52-week low. And I don't think I need to say anything more about this negative divergence in the NASDAQ AD line versus the NASDAQ 100. So yeah, the market is at a new all-time high, but however, the internal are showing us a true picture in the state of the market. And here, looking at these major market indexes, we only see the S&P 500 and also the NASDAQ 100 is above the 30-day moving average, while all the other major market indexes like the Dow Jones Industrial, New York Stock Exchange Composite, the Dow Jones Transportation, and the Russell 2000, they are all below the 30-day moving average. And here, looking at the 11th sector in the S&P 500, we see that the technology, the consumer discretionary, and the communication sector, and also the retail sector is above the 30-day moving average. Only the consumer discretionary was up last week, and that is primarily due to the Tesla stock price. And here we're looking at the remaining sector, and you see the healthcare sector. Well, it is not healthy. It is actually very sick, right? It is continue to come down, and also you notice that the the utility is also down. And here the financial, it was a little bit of a sign of strength for the market, but notice in the last couple of weeks, it really have deteriorated and came down. And right now it's sitting right near that 30-day moving average. So you got to keep an eye on this. This seems like this could be rolling over. And here's the table of performance for the indexes. And here are the performance for the 11th sector. So you might want to pause that on the video and then go back and take a look at it, or you could refer back to the text version in my newsletter. So the conclusion that we can make after this review so far is that beware of a sudden liquidation break, because the market internal is really showing us the market is quite weak and it is not as strong as the S&P 500 and the NASDAQ 100 show us or make us think it is. For next week, be aware of the FOMC meeting. Now, the market is pricing in a 96% probability that there's going to be a 0.25% reduction in the interest rate. This is almost like a done deal. So, whatever announcement the FOMC is going to make in terms of the rate reduction, unless they are not going to cut 25 basis points, then that would be a disappointment to the market. But that's what the market is expecting right now, 25 basis points. And so it's all come down to what Jay Powell will have to say during his press conference, half an hour after the interest rate announcement. Now let's go and take a look at some of the price action for the E-mini S&P 500 futures, and also the SPY, the ETF for the S&P 500, and the QQQ, the ETF for the NASDAQ 100. Here we are looking at the E-mini S&P 500, the ES market profile. And as you can see that we have left a couple more single print zone from Friday's auction. And also we saw a poor low from Friday. Now there is still this poor high back here on December 11, and also the all-time high, which is the poor high. Now, in this week, we're going to be rolling over to the March contract. So this is still based on the December contract here. And there's going to be adjustment somewhere around, close to 71 points on the upside. So I have not made the adjustment to this chart here, which I will not, because it's just too complicated and too messy. But I will alert you when we see the adjusted value all-time high get hit. So be sure to either follow me on my Twitter or follow me on the chat in my newsletter, on Substack. So we could see that couple scenario here, just based off this market profile chart, is for it to come up on the upside, is for it to come up and fill these single print, or to come down and test this poor low and also dip down and fill the single print that was left behind in November 29. And here we're just looking at the volume profiles only on the ES, and you can see these four balance area. Right now, the price appear to be balancing up here at this area between the 6050 and 6110 area here. So we'll be looking at this high volume node here at 6096.75, somewhere around there, that basically close to that 6100 level. Okay, so keep an eye on this level here because there seems to be, there are a lot of activity up here. It could be that a lot of trap long is up here. So when it get up here, we might get another liquidation break and push it down and dip below this balance area and into the 6,000 area, the balance area here. And if we take a look at the candlestick chart for the ES, we see that last week it actually closed inside of the lower range of the expected move. And also it is still above this 30-35 moving average cloud here. This is a SMA cloud that I have. And basically just for me to visualize the trend, I don't trade off of these levels. So I'm only use this as a visual reference to look at the potential price trend. And here is the possible scenario with the upper range expected move. For the upside is to come up into this upper range of the weekly expected move between 6124.75 and 6113.50. Now, if Jay Powell have some dovish comment to make, then we could see this market accelerate to the upper range and possibly get up to the December upper range, and that would be somewhere around 6188. Now on the downside, we are basically looking for the scenario to pull back and come down to the lower range and possibly test this 30-35 moving average cloud and dip down to somewhere around this 5958 area. And then if there is some hawkish comment from Jay Powell, then we might see it get dragged down into the December low range, and that would be somewhere around 5915 and 5880 area. And here we're looking at this 60-minute chart of the ES, and as you can see here, what I have is this is the 8-day EMA, and this is the 35 period SMA. So within the hourly chart, that represent effective 5-day SMA. And what I'm seeing here is you see the price is rolling down underneath this 35 SMA. And keep an eye on this 6047.75. That's a level that we want to keep an eye on to see will the ES be able to hold this level. If it could hold this level, then we can see it bounce back up to an all-time high. But if it break below this level, then we could see the price come down, test the lower range of the weekly expected move and come down to this LVN and possibly into this high volume zone here in the December lower range of the expected move. Now looking at the SPY, the ETF for the S&P 500, we see that on Friday it closed within the weekly expected move inside that range. And it is balancing here between the 608.50 and 602 area. And for the coming week, the market is pricing in the upper range somewhere around 611 and the lower range between 597.40 and 594. So the scenario is for the price to move up. If it's going to bounce, then it move up to the upper range of the expected move and take out the current all-time high and put in a new all-time high. Then on the downside, it's come down and test this 30-35 SMA moving average cloud here, and then see it would it be able to hold support at this LVN near the 592 area. And looking at the hourly chart for the S&P 500 ETF, the SPY, we see that it is rolling over as well on this 35 SMA. Okay, and also underneath the 8-day EMA here. So the key level that we're going to keep an eye on is this 601.92, this LVN, to see would it be able to hold this level. If it dipped below this level, then we're looking for the price to come down to this LVN, possibly, this 591.93. Now, if it hold above this 601.92, then we're basically looking for a move to possibly to a new all-time high. And here we're looking at the QQQ, the ETF for the NASDAQ 100. You see on Friday, it closed with a doji type of spinning top right inside of this December upper range. And this is more of an indecision type of a candle. And that could be a sign that we are seeing the exhaustion on the upside, or the market participant is having doubt about any much of a further upside here. But in regardless, we're going to be looking for a potential upside scenario with the upper range. The market is projecting 540 and 538.50. And the lower range for the coming week is 522.60 and 519. So the upper range scenario is for this thing to continue to push into a new all-time high and into the upper range. Now for the pullback, we're basically looking for it to come down, possibly maybe test for support near this HVN here, which is coincide or in confluence with this lower range at 522.60. And if it doesn't hold this as a support, then we look for this thing to come down to this HVN, this high volume node near the 513.42. And that basically will fill this gap here, between the 519.16. And here looking at the 60-minute chart of the Q, see that it is still on a above this ascending 35 SMA, and also above this 8-day EMA. So again, the key level to watch is basically this level somewhere around 526.30. If it dipped below this level, then we are looking for a little bit of a pullback down to possibly get down to this 513.42. But if it is able to hold above this level, then we're looking for all-time high and push up into the upper range of this weekly expected move. So in summary, the market is in a pullback mode other than the S&P 500 and the NASDAQ 100. So any slightly bearish or hawkish word from the Fed could trigger a volatile liquidation break. I would exercise caution in terms of initiating any new long position right now. My sense is the market is walking on eggshell, so be careful. If you like this video and find it informative, be sure to click the thumbs up to give it a like and help promote this video on YouTube. And if you are new to this channel, click the subscribe to help support this channel. And if you are interested in looking at more of my contents, then go check out my Substack newsletter at smtraderCA.substack.com, and you can find a link in the description below. Thank you for watching and good luck on your trading.